Hey, g'day, Rudy here. Welcome to this week's dividend video. So we start off as usual with the interest rates. So we got the 1 year government bond yields here. So 2022 broke the declining pattern, and we're sitting at 3.4 at the moment. If we just go back to a weekly chart, so we're still sort of just hanging around this 3.4 mark in the zone, so no real direction yet. If we look at the 10 year, go to monthly, so again 2022 they broke it, holding more of a bullish structure than the 1 year, and you can see that when we do the so this is the 10 year over the 1 year rate. So there has been an upward bias for the long-term rate to be increasing higher than the short-term rate. So we're just consolidating at the moment. Interesting, around the world, all these, all the government 10 year, 30 year, they're all heading higher. All right, so onto the shares. So first cab off the rank. Actually, so I should say, so all the dividends I talk about, I get from Morningstar, because there are different sources, but so just so you know where I'm getting them from. So Atlas Arteria, so global toll roads, 7.5. I reckon if you can come down here to around $5, that's probably worth having a look at. If you're in it, hold it. Mr. AGL, very disappointing results. Now it's on a div of 5.9. It's not a buy yet, but if it can consolidate around here and start moving up, then so we'll just keep an eye on that. It's too much of a bottom picking exercise at the moment. ANZ, if you want to buy a bank, that's my preferred bank. So it's not at all-time highs, but if you want a bank, 4.9 is the div. It's my preferred one. APA, this has been a good one for us. It's not too late. 6.4% div. So that's looking nice. It's not with these div stocks, we're not looking for a Linus rare earth stock that flies, so we want stability in the share price. So they're just approaching a resistance at the moment. Horizon, so 4.9, so close to 5. Rail freight operator, so I think anything buying up around $3, it's pretty solid. It's out of the downtrend. BFG, Bell, 5.5. Just got it on there as a watch because they're doing some interesting stuff. So yeah, that's it. Beach Energy, so oil and gas, 7.4%. So we're still, I reckon anything you can pick up, anything around here. No one loves oil at the moment, so good time to be accumulating, I think. But no rush. Dicadata, I've been saying this ever since I started this div. I love 5.2 is the div now. It's in the tech sector, but it's not a tech stock. It's a distributor, wholesale distributor. I like it. And it looks good. DBI, so Dalrymple Bay Infrastructure, so the coal, 5.3, so that's coming down to some support around here, so probably giving it a nibble. It's not too bad. We got Terra Royalties, so they 5.2. Take a clip of BHP's iron ore. So that's, I reckon that's a good place to accumulate now. Elders, so 4.9. Just been waiting for them to do a little bit more. Just scared they might, although we have past reporting season, so I like the fundamentals. I think you got to giddy up on this one, Fortescue. Iron ore prices starting to look very attractive. I'll leave the King MVR ETF at the end of this one. Have a look at all these resource stocks. 7.3. I reckon that's a bottom. GQG 10% div. Global Fund Manager. Not a great fan of them. And yes, scared support's not going to hold, but we'll just keep watching. IGO, so they're sort of half a lithium mine and other half nickel, copper, and a refinery. Don't like the refinery part, it uses too much energy, but anyway. Div at 5.1, around these levels is good to accumulate, I reckon. The Chicken Man, ING, 7%. It's got to be coming down close to some support to pick up. So we'll just keep watching it. Don't go in yet. IPH, so 8%. They're in intellectual property. I reckon it looks like it's finding a bottom, but I'd wait for just some confirmation of this type of price action. Lindsay Australia, 7.5%. So Lindsay looks like it's got a bottom here. You can see down here there's some buying. Came down here and came back up here. Seems to be a bit of a buy zone around these levels. So that's pretty good, 7.5. Macmillan Shakespeare, 7.7. Celery Packaging, just at resistance at the moment. I think definitely if it drops back, it's a buy. It's probably still not a bad long-term one, 7.7. Government customers. I heard 70% of all jobs created in the last, 2-3 years is government related. Anyway, get on with it, Rudy. New Hope Corporation, so this is my preferred coal stock, 9% div. I think this will go. 3 billion customers. Coal's not dead. RFF, so Rural Funds Group, 6% div. So agriculture, nice space. Okay, so technically they've done the breakout and they're coming back for the retest. So I reckon anything around here, $1.80, $90, would be a good buy zone. Rio, I'm pretty bullish about Rio. I think 5.1 div. They're setting up to rip. Anyway, Spark, not a great fan. Neither is a sub who doesn't like him either. The divs of 10. So we're just waiting for them to fall over. I think they need to be punished, and then we can pick them up cheaper. But I'll just keep it on there. All right, the king of divs, Woodside. So 6.3. Oil prices going down at the moment. I don't think you ever get. I don't think we'll ever see Woodside down at $23. I reckon there's a good chance we'll see it over the next 5 years, 2 years, back up here. I'll say that's for a lot of. Well, I guess that leads me to the King ETF. So this is MVR, the sort of top 31 mining related companies. The div's just over 4%. So it's got your BHPs, your Rios, your Fortescues, your Woodsides all in one. It's my preferred growth ETF as well. So In terms of other div ETFs, we've got VHY. So it's got more banks in it, paying probably in the high fours. But if we this is the MVR over the VHY ETF, so growth wise, MVR is going to outperform. SYI, the high div yield ETF, so it's paying high fours, so it's got more banks in it. This is MVR over SYI, so MVR is outperforming. And YMAX. So someone's asked me about YMAX, so I'll spend a bit of time on it. So YMAX is basically, it takes the top 20 ASX companies and writes covered calls. We'll go through what that is. And they pay a good div. It's basically twice the div. We call it 7-8% compared to 4-5%. Franking's level is not that great, but you can see neither is their growth. I'll go into that. So this is ILC, which is the top 20 companies. So it's basically it's the same companies that this thing is invested in. If we compare the growth of ILC over YMAX, like you can see, if we take it from, let's go back 5 years. So from August 20 to today, so ILC has outperformed 36% the growth of YMAX. So what's that? 7.75 35. So you call it, compounded 5%, an extra 5%. So my view on it, it's pretty much a zero-sum game. Like, you can get YMAX. Okay, so how do they? What's this covered call thing, Rudy? Okay, so this is CBA. So like traded at 168. So what this YMAX does is that these are what you call a call option. So a call option, if you buy it, gives you the right to buy a share at a certain strike price. Okay, so this is the strike price, and we'll just go down to something that's closer to the money. And so let me just explain. So it's like a share. So there's bids and there's offers, just like a share. So what YMAX does is they sit in this column here. So they sell call options, okay, and they collect a premium. So just so you know, this is the one we're looking at. Okay, so these are the strike prices here. So if we get something a bit closer, so here, and these call options expire in 11 days. Okay, so what YMAX does, is they go on there and so they'll put on offer this call option at this strike price for $5.57. So someone who buys that, like Monday, that person will get the right before 11 days, before it expires, to effectively buy Commonwealth Bank for $164. Okay, so what the person who buys it, he thinks Commonwealth Bank's going to $180, right? So he pays $5 plus. He says he's going to pay $169 all up, but Commonwealth Bank's trading at $180. So he's laughing. You get that? So 169 and it's worth 180 in 11 days time. So he's just made a nice profit. But what's happened is YMAX needs to sell those. YMAX takes the hit, so it loses out on that gain that this person makes. I hope that made sense. So that's why. So YMAX misses out in a bull market. You don't want to be doing this because covered calls work best in a sideways market. because what that means is people buy it thinking pay a premium, that premium. So they'll pay this, but then if the share goes sideways, they lose that $7, and YMAX puts it in his pocket. So covered calls work good in a sideways market, but not a bullish market, because in a bull market, usually you lose the upside, which is, as you can see, YMAX isn't getting that upside. Alright, I hope that made sense on YMAX. Let us know. Otherwise, if you've got any other ASX shares paying a good div, please share. Otherwise, have a good week. See ya.